How are interest rates affecting buyers' purchasing power? We'll take a look at two different scenarios coming up next. Hey, what's going on, friends? Welcome back. This week, we're going to talk about buyer purchasing power based upon price point and what the interest rates are. And so I have two different scenarios for us to take a look at that kind of illustrate the Big Island market, West versus East, and kind of average price point, and then what interest rates kind of are right now. So let's dive right into the data and take a look. And so this is showing us what the monthly payment is, principal and interest. And of course, this is going to depend heavily on your specific situation, your credit score, your loan program, but this is kind of on average what you can expect in terms of a monthly mortgage payment. And across the top here is the price point of the home, and then over here on this left axis is the interest rate. So if you want to buy a $550,000 home and the interest at 8%, you'd be looking at a $4,000 a month payment, a little more than $4,000 a month. Where if the interest rate was 6%, you'd be looking at a $3,300 a month payment. So pretty big difference, right? Like $700 a month difference on a 2-point interest rate change. But the thing here is if you look at kind of around 7%, which is where the interest rate's been hovering lately, sometimes a little bit above, a little bit below. If you're waiting for just a little tiny change in the interest rate to make a purchase, it really isn't going to make that big of a difference. And that's really what this shows is if you're looking to buy a $550,000 home at the interest rate is 7.25%, it's $37.52 a month, where say it drops a half point to 6.75, you're at $35.67. So less than $200 difference there in terms of the monthly payment. And if you think about over time, what the appreciation of that home is and the cost of you to continue to rent, it may just make more sense to just buy that home today at a little higher interest rate, and then you can always refinance it in the future if it goes down a significant amount. And so this is kind of in that median price point range, right? That East Hawaii, you can get a great house in East Hawaii for $450,000 to $550,000, and this is kind of the payment that you're going to be looking at. So also, it's a way to put into context your rent, right? If you're already renting for $2,800 a month, or $4,000 a month, if you're renting a big home and you're looking at buying a $470,000 house, you can get a $470,000 home for $3,500 a month, even at an 8% interest rate, where if you're already paying $3,200 or $3,300 a month, that is 100% interest that you're giving to that seller to pay their mortgage, and you're not seeing any of that long-term appreciation or value come back, the tax benefit of paying a mortgage. So just something to consider if you're currently renting and comparing what your rental costs are to the cost of home ownership. And so this is the first scenario looking at a buyer's purchasing power in this price range. And if we jump to the higher price point and we look at, this is more kind of a West Side scenario where you're looking $860,000 to $940,000, that just sub $1 million range, the numbers obviously are going to get a little bit bigger. So if you're looking, let's say, at a $900,000 house at an 8% interest rate, you're looking at $6,600 a month, where if the interest rate was 7%, it would be just under $6,000 a month. And if it was 6%, it would be $5,300 a month. So we're talking a big difference, right? $1,300 a month in a 2-point difference in the interest rate, and nearly $700 if it's just a 1-point difference in the interest rate. So as price point of the home gets higher, you're going to see those numbers get that gap get larger in terms of how the interest rate affects your monthly payment. But in a lot of cases, if you're looking on the West Side and you need to rent a home, even if you're in this $860,000 range, the rents on the West Side for a very modest 3-bedroom home are well over $4,000 a month now. So you may have to sacrifice a little bit and come up with a little bit of extra money and maybe pay that $500 to $5,500 a month mortgage, but you still, like in the previous scenario, could be better off long term than waiting for that house to continue to appreciate, and in the future you're paying a higher purchase price with maybe a lower interest rate, and that may not be the best case scenario for you going forward. So long story short, even in this high interest rate environment with the cost of rent and the amount rents have increased over the past couple of years, you still can be in a better situation just buying, maybe paying a little bit more than you would be paying in rent, but long term, you have that cost locked in, you have appreciation that you're going to experience from that home, and you're also going to have some tax benefits from paying mortgage interest versus the zero tax benefit you get from paying rent. So all things to consider, and just I can send you these charts if you want these more specifically, but it's always best to also speak to a loan officer that can look at your situation and give you exact numbers on what your cost would be, because if there's HOA fees, property taxes, other things, other variables, these numbers can change, but these are kind of on average what you'd be looking at. So if you have any questions, you can always email me at dylan@buybigisland.com, book a meeting in the link below, or just drop a comment, and I'd love to have a conversation with you. Thank you guys for watching. Talk to you guys next week. Aloha.